This is David Patrick, Fitzstock Charts weekend market video analysis. Charts way sleep week 31 for July 26, 2019. We're in a 4-day uptrend. Things are choppy. We're going to get to the charts in a moment. Higher time frame remains bullish. 2012 historical chart pattern comparison remains bullish. The FOMC is next Wednesday, or this coming Wednesday. That will be event risk. You have to know your time frame, and we're going to get to that in a moment. This is super, super important. I always like to bring up questions or even comments on videos from subscribers. And one comment this week, and I think this is very relevant, is, I'm posting on Twitter a lot of different things. And most of them, if you don't know, are for short-term day trades, 5-minute rules of engagement. And you need to know that. You need to know the time frame you're trading. Otherwise, you can become very confused with your trades. Now, the service is beneficial for day traders and swing traders. I'm a hybrid trader. I have separate accounts. I day trade in one. I have my swing long accounts, my investment and retirement accounts. I tell you what I'm doing in those accounts. I tell you my long market exposure all the time with the daily updates. But you need to know your own risk profile and your own trading time horizon. You cannot clone my risk profile. There's just no way. There's nobody that has a risk profile like mine. With that said, there's many ways to succeed with the service. And you can succeed with day trading, you can succeed with swing trading, you can succeed with hybrid trading. There's a couple questions that I want to address. Scaling is one, and time frame is the other. So you need to know your time frame. One of the questions asked was, I'm posting a lot of things on Twitter that are shorter time frame. I'm starting to get emotional with my trades because of your tweets. I think that's very relevant because I don't want that to happen, but you have to understand that Twitter is for more of the short-term day trades or my aggressive trades. The service, the main focus of the service is what we're staring at right now. Actually, we're staring at the 90% club, but is the ESFL that comes out every day. That's the focus list. That's what I spend all my time doing. Scanning, looking for stocks showing relative strength, relative weakness, scan for historical chart pattern comparisons to give us a trading edge. That is our trading edge, the focus list. The video updates give us, elaborate on current market conditions and my positions and different stocks that we're scanning and looking at. But the main focus is the ESFL, the daily updates, the video updates. It then comes in Twitter. Right, Twitter's a way for me to communicate with all my subscribers. Way to communicate with my positions, way to communicate with day trades, way to communicate with stocks and engage. You don't need Twitter. I love Twitter as a communication device, but you don't need it. By all means, look what you're staring at right now. You're staring at a 90% club. Someone had mentioned, the other question was scaling. Well, if you're scaling up 1%, up 2%, you don't have any size on when a stock really runs. So a couple things. Number one, if you choose to, you don't have to scale. If you didn't scale with the 90% club, look at your returns. 1,090 different options that have doubled since we launched the service. 298 triplers, 147 doublers this year, 38 triplers this year. We have 282 different stocks this year that engaged off our focus list. 6 no scales, 24 losers, 252 winners, 89% win. So if we're able to scale 1% up 2%, that's a win to me. Getting back to, if you have 1,000 shares on, you only have 250 shares after the scale. Well, another important part of our trading methodology is adding on price strength confirmation. So if Apple breaks out at $100, we scale at 101, scale at 102, it bull flags, and 2-3 days later, it shows price strength confirmation. You saw me earlier this year. I had 300 calls on an Apple on price strength confirmation. I rolled up with size. Same thing with Xilinx. So you add on price strength confirmation, and you either roll out of your current options, or if you only have stock, you double up your runner and then raise your stops to protect profits. That's a totally different species. I'm going to elaborate on a lot of the stuff when I finally get the time, hopefully later this summer, to redo a lot of these videos. But getting, pointing out the scaling, adding on price strength confirmation, winning percentage. The most important thing is getting your positions on that meet your risk profile. Identifying your own trading time horizon. If you're a day trader, you're a day trader. If you're a hybrid trader like myself, you're a hybrid trader. Keep your counts different. If you're a swing trader, you know what to do. It's real simple. You don't even need Twitter if you're a swing trader. Just put the stocks on that meet your risk profile, your trading time horizon from the ESFL. If you choose to scale, which I do think you should, then scale and add on price trend confirmation. If you don't choose to, that's up to you also. You'll still succeed with using trading rules of engagement based on market trend. Okay, I didn't want to spend too much time on that, but I thought both those things were relevant. So obviously your 90% club continues to grow in this uptrend. Okay, so what do we have here? I need to pull up the SPX, and I wanted to show the historical chart pair comparisons, and then I wanted to look at talk about this time frame thing again because I think it's important. It's very important actually. So, before I forget, because I'm scatterbrained, my positions. I want to talk about that also. So, let's look at the historical chart pattern comparisons first. We are 6 minutes in. We got plenty of time. Okay. So left is the current market. And by the way, who's looking at this? Nobody besides people in the service. There's nobody. It's not, you could turn on CNBC and Bloomberg, whatever Twitter channel you have, social media. Nobody talks about historical chart pattern comparisons. We do. We identify patterns that repeat themselves. We hit it out of the park with 2012. Will it continue? We don't know. It will eventually diverge, but until it doesn't, we're going to continue to capitalize on the upside of the market, right? Okay, so bull flag above a breakout. Bull flag above a breakout. You can see that it starts to build some kind of wedge, right? In baseball, you could use a spray chart. If this is third base, first base, and second base, you got a spray chart where it hit the ball. It's almost like a wedge, a spray chart going up. And that's what we're doing. So eventually, and I keep saying this, we could see at some point a test of the 50 SMA, just like we saw in 2013, right? And that actually would be a very bullish setup because it would shake the market and set up for much higher prices. Now, I'm not going to predict that happens, but we do have event risk coming up. And a lot of times the Fed creates volatility. And the market could be disappointed with the Fed cut, or if the Fed doesn't cut, or maybe they're shocked if they cut too much, or if they just do 25, whatever. The market's going to interpret it how it's going to interpret it. We're not going to predict what the market's going to do, but all I'm saying is if the market reacts negatively after the Fed, I wouldn't be surprised if we come all the way down here, we hold 29.50, the old breakout, and as this 50 starts moving up, we stay above it and get knocked out of trend again, and then reset up. Now, I would love to see that scenario. I'm not predicting it by any means, but I just wanted to, to point that out. So let's get to, before we move to the rest of the stocks, understand, okay, so this day right here, I took profits on SPXL. I took profits on TQQQ. I took off the shares that I was profitable in. You got to remember, I scaled both, and I didn't want a winner to turn into a loser. So I decided to get out earlier than, let's call it, the previous day's low or somewhere down here. Is that micromanaging? Probably yes. Do I regret it? I think I do now because we're at higher prices. But once again, that's my risk profile, my trading time horizon. I am super aggressive. I put on big size, I scale fast, and I add with big size when I like what I see. So you're never going to be able to clone that identically, and that's why you just have to trade in your comfort zone. If your comfort zone is being long 50%, being long 100%, being long 150%, whatever it is, if you're swing long now, use this as your stop right there. Real simple, right? 29.73. If you're swing long from down here, you could use this as your stop. If you have problems with trying to figure out where your stop should be from where your entry is, shoot me an email. I'll try to help you out. But we've had 6 uptrends this year, and we've gotten paid really, really well. With that said, probably because we've had so many, I don't want to give back a lot. I still want to be leveraged long as we keep going higher, but there's going to be occasions where I'm not leveraged long and we're in an uptrend. And it might have to do with, we've been in so many uptrends this year, it might have to do with a lot of different things. But right now, I'm not leveraged long. I do have 30% long market exposure with SPXL, 10% allocation long to that. That's obviously 3 times long the market. And I have spider call spreads on, which if I exercise, I could be up to 100% long spiders. I don't know. I'm not going to try to predict whether I'm going to exercise those or not because these other ones I didn't. And I'm just going to treat it as a trade. And okay, so let's talk about that before we go on because I think this is important too. So I put spider calls on. I took them off the other day and we started melting down, right? I can't remember where it was. And I'm like, you know what? I want to preserve the gains, the little gains that I had left on the whole concoction I had on. I had a spider calendar spread on. So with that said, I put things back on here. And let me put, let me change so we can see 2 different things here. So you're going to let me, I might not because I'm filming, I don't know. Okay, I think I got it up. Okay, so this is knowing your time frame you're trading and keeping, if you are a multiple time frame trader like myself, keeping different accounts and what you're doing. So I put my spider calls back on. I pointed out, I think the market's a little toppy here in this gap up and we can still gap fill, but our number 1 trade setup is what? A bull flag above a downtrend line. So I'm going to put on a swing position in my investment / retirement / swing long accounts, right? And I did that with the spiders. It ended up scaling a little bit, didn't make a lot of money, and it just kept it on. In the meantime, I pointed out over here on the right that after I scaled that things were getting a little toppy-er because right here, this old support, I think it was around 3020, if you'll let me draw it, was becoming resistance. And just be prepared. And guess what happened? It was resistance and a short set up. And so I did engage short at 3018. I said I was going to scale at 3016. And then we got back up here. I said I was going to put my stop at 3020 because this long right here, this is a day trade. Obviously, if you're day trading 5-minute rules of engagement, this long paid from 3016. So you paid +4. I got, I think, +3, +4, and ended up stopping out right here. So let's just say I got +3 on it. Well, I didn't want this winner to turn into a loser, so I had a little bit of a winner. I scaled, I got stopped out. So this was the scratch. Scratch means you didn't make money. In fact, you might have lost money with commissions. Either way, I wanted to show you this is a day trade versus this is a swing trade. So, all right, so getting back to, and that's knowing your time frame. You can't flip-flop around. If you're going to be in a day trading account, day trade in that account. If you're going to swing long, I'll go on that. If it's confusing on Twitter on what I'm doing, by all means, you don't have to log into Twitter. Or if you have a question, just shoot me an email or hit me up with a direct message on Twitter. But Twitter is difficult because I have a lot of different types of subscribers. Some people are literally just swing long. They don't micromanage, and some people strictly want a day trade. And the service is designed to help both. And it's hard to make everybody happy. I'm doing the best I can. But I'm going to continue to post, 5-minute rules of engagement along with swing trades on Twitter. I just don't want it to be confusing. If you are truly a swing trader, just ignore the 5-minute rules of engagement. It's not going to pertain to you because it's day trading. Okay. All right. So we are now 13 minutes deep in this video, and we're going to move on. And let's pull up the SPX here. And why did that show that? Let's go to a daily. All right, so there we are. we mentioned that we have sort of like a spray chart here. We can call it a wedge, call it a megaphone, whatever you want. And so it's possible that you could squeeze up to 3,050 or so before the next pullback. You got to remember, these new highs that are happening without MACD. Does that make it bearish? No, it just means you got to be skeptical if we can come back down. So with that said, wherever you're long from, if you're long from here, you got to remember, a lot of people are, we've launched a service 6 years ago, so you could be long from a lot lower levels. Some people are still long from here. Wherever you're long from, find an area on the chart. If you're long from here, your stop is still here, right? If you're long early in this uptrend, I probably would use, I don't know why this tool's not letting me draw today. I probably would use this as your stop. And if you want a wider stop, 28.74. 28.74, because at that point you're breaking the 50 SMA and the market's going to get really sloppy. So what do I think can happen? It's very possible keep squeezing higher into the Fed, and then I don't want to say most likely, but there's also a very high odds that at some point you see some sort of sharp pullback on whether profit taking after the Fed, buy the rumors, sell the news, or something the Fed, the market didn't like. Okay, with that said, we are in an uptrend, 4-day uptrend. Things look good. When we look at our higher time frame, which is what we trade off of for swing trades, it remains in what, a 6-week uptrend, I believe, maybe more. But let's see here. We went above the 10 SMA there. So 2, 3, 4, 5, 6, 7-week uptrend with MACD at the highest level since March 2018, which be what, 14-month high in MACD, confirming the market wants higher. I do think I even posted on Twitter, I think the market is going to be significantly higher. And if I'm wrong, I'm wrong. Believe me, everyone's got their opinions. And I'm certainly have been wrong many times in my career. But my opinion is based on technicals. The technicals, as long as we stay above this rising 58, let's just call it 29.50. As long as we stay above 29.50, I think the market's going much higher. And I do think 10% is not out of the question in the next, 6 months. And that puts us into, the January effect. So why can that not happen? Why can we not go to, 3,300 in the SPX? As ridiculous as that sounds, it's not ridiculous. I mean, 10% is nothing. And this is a bullish cup and handle pattern. We have a weekly bullish pattern, and we have a historical chart pattern comparison that's bullish. So it's real simple. As long as we stay above 29.50, I'm constructively bullish on the stock market. All right, so let's see what we have with the NASDAQ. Looks like it wants new highs without MACD, bearish divergence. Still looks good. We're having some mixed basket with earnings. Amazon goes down. I think Netflix went down after earnings. Facebook went up and down. So you got a mixture, and then I think you have Apple coming up here. Google was good. So I think you got a mixture. The semis are just on fire. And we'll look at those in a moment. Oil continues to look bad. I don't think there's even a reason to talk about. Transports are still in that mega wedge pattern. The Russell wants to break out of this wedge. It's really getting to usually when you get to this point or close to, volatility picks up. I think what happens is gallops up, comes back down, and then we start going back to new highs on the Russell 2000. My personal opinion based on technicals. Financials, I love. How can I say I love them? These things have burned us so much this year. It's the only sector that really burned us. I don't know. I think it's a bullish cup and handle. I think the burning is over, and I think the grinding is going to continue. Is it going to be volatile? Maybe. Is it going to be choppy? Maybe. The stocks in the sector, which we'll look at in a moment, look good. What probably looks the best of the industrials still look good. How can I say that when we're below the 10 SMA? Because I still feel that these things are going to stay in this wedge, and as long as they're above here, I still think they could lead again on the way back up. I know it sounds crazy because we're now in no trend in the Dow, and we're trending in the other ones. Wait, time will tell with that. Let's get all our stocks. Apple continues to grind, has earnings. We will not initiate a new position in earnings. Amazon gapping down to touch the 50 SMA. That's actually bullish as long as it holds the 50 SMA. I think it will reset up long. Netflix saw engaged short here. It paid, and now it's coming in the gap. It's a very sloppy pattern. We're probably not going to be touching that one with the slopping pattern. Booking finally is starting to look very bullish. You want to say head, left shoulder, right shoulder, that's fine. Whatever you want to call it. We have a golden cross, very bullish. We're coming into a gap, and I tell you what, this one and Expedia, although it's doing a shooting star there, are starting to show some momentum. So this is good because we needed some sort of different sector leadership because we're losing it with Amazon a little bit, Netflix a little bit, Facebook a little bit. Let's look at that Facebook. It hit new highs without MACD. Can it come and touch the 50 SMA? Yeah, no problem. And that's what it should do. Tesla chart very sloppy. I thought it was going to ground into 200, had earnings, gap down, it's holding the 50 SMA. I do not see a new trade there. Leave it alone. Google looks really good. I got to say, this price pattern I do like a lot. So the problem is, obviously, you're coming into a gap, and as you get closer to the gap, what happens? Price stalls. So what would I like for this thing to see? Maybe come up to the gap, do some sort of pullback, and erupt this summer. And I do think there's a good chance that happens. So I guess keep this video on file and see if I'm right. NVIDIA grinds higher. The 50 is starting to move up, and I tell you what, start seeing a few more golden crosses. I think some good things are going to happen. Intel, I think all the chips look good. NVIDIA, Intel, Texas Instruments, to me, looks phenomenal. That is our number one trade setup. Bull flag to new highs is not engaged yet. Give it some time. Micron, AMD, OLED. Now, as good as this sector looks, I will say they're getting a little long in the tooth here. I would like to see a pullback in that sector to reflush things out. There's getting too many bulls in that sector right now. Microsoft looks very good. Oracle breaking a downtrend line. MACD starting to curl up. Give it some time. Adobe sort of grinding nowhere. Coop looks pretty good, but it's going higher without MACD. Now it's flat. Workday, Jobs. No. Team gapped up to new high. Yes. I like that stock. Twitter, new high. Oh, we got some leaders here. Snap, new high. This is exactly what the doctor orders. Roku looks pretty bullish. GoDaddy, Wix sleeping. Visa, MasterCard sleeping. Actually, MasterCard's at new highs. Citigroup, Morgan Stanley, Goldman Sachs, USB engaged today long. That one looks very bullish. Obviously, it was on the ESFL. Wells Fargo even looks good. And that's lagged for a while. JP Morgan, let's see. And that one looks slow. So that sector is getting better. Let's look at Baba. Baba looks bullish, but it's very slow. I like it when it leads. Baidu needs to get above that 50 SMA. We look at Workday, CYBR, looks very bullish. We have about 6 or 7 leaders. BMW, Panwa. Panwa looks good. Did we look at Vive? No, Vive looks just okay. eBay continues to grind. Doesn't look too bad. Shop, that looks like it wants a 52-week high again. Box, not so much. What about Momo? Really going nowhere. Let's see about CME, ICE. These are pulling back, and I do think they will. Don't call me a perma bull, whatever. I think these stocks are just resting. I don't think there's damage done. They're resting. They're pulling back. The pullback was well-deserved. And we'll see if they hold the 50. If they hold the 50 and they break a downtrend line, guess what? They're going to set up long again. FVRR just does not have enough momentum. SQ looks very good, and I think that's a leader. Do we look at BlackRock? No, it's not doing too much. Let's look at oil. No, COP does not look good. PSX, Oxy. This sector is sleeping. I'm not going to spend too much time with it. Kronos. The weed sector doesn't look too good. Let's see. Biotech. No. And what does biotech look like? IBDB continues to grind lower. Alexion. Alexion looks like a short setup. That does not look good. And that sector does not look good. So we'll see. Can the strength with Soxel, by the way, which is the semis, triple long semis, will the strength in the semis counter the weakness in oil and the IBB, which continue just to really underperform the market? X-ray, that's setting up short. UBNT, let's flip to different stocks here. Not doing too much. CMG, yeah, that still looks like it wants higher. It's taking its good old time, but that looks higher to me. Twillo, that looks like it wants a 52-week high. IQ, Docu looks pretty decent. And let's finish, well, with this. I'm getting a lot of requests for this one. This Beyond Meat. And yeah, this is a crazy stock. This reminds me of one of these cryptos. These stocks that just get crazy. Is this bullish? Obviously, the chart's bullish. You can just draw downtrend after downtrend after downtrend. This is a bull flag here. Do you chase it up here? You can't chase it up here. You can't short it up here. So you do nothing. You have to wait for the bull flag and then maybe take it long again. Yes, this is bullish. MACD highs with price. So that remains bullish. I probably, if you miss it, you miss it, but I probably would wait for a 1 or 2 day pause to initiate long. This stock was just in June at 138. I mean, it's almost doubling. Well, not quite doubling, up 60 or 70% since June. It's a big move. I just think there's enough stock, enough money to be made out there that you don't have to chase a move like that. But yes, the chart remains bullish. I just would not chase it. Okay, so Lyft and Uber. I'm going to reiterate this. These have been slow movers, but these are also, like I said back in here, I think great swing longs. And it might take 12 months to really, really get paid on these, and it might take less. I don't know. But head, left shoulder, right shoulder, this continues to grind higher, and it's got a gap to fill. Lyft looks good. If you initiate long, you know where your stop is. 58, you're risking 15% to maybe make 100% if you're a swing long trader. Uber, same thing. I mean, it's consolidating. It looks bullish. MACD's heading up. I think above here is the next long. And if it fails, you probably use this as your stop. So Uber looks fine too. So we're going to finish. We are 26 minutes in. Oops. We're going to finish with our SPX. And right now we are hitting new highs without MACD. And we're heading into the FOMC next Wednesday. And we're heading into also the end of the month, which is coming up, which a lot of times can create volatility. And then I think you got new month coming in, new money, new month. So I remain bullish. And if we do see a pullback to the 50 SMA and it holds and we reset up, I will even be more bullish. If we break 29.50 and we close below it, then the whole thing changes. That's all I got for you on the market video update for the weekend market analysis. Have a great weekend. See you on Monday.